America has 30 million businesses with 0 employees. Their average revenue, about $57,000 a year. The 50 in this spreadsheet clear between 200,000 and 3 million. And I ran the numbers on every single one. Welcome to New Wealth, where we reverse engineer how money is actually made in this economy, not how people say it's made. Last episode, I promised you the quietest businesses on the internet. This is the delivery. We compiled 50 zero-employee business models from operator income reports, acquisition marketplace listings, platform payout data, and put 3 numbers next to each one: the revenue, the margin, and the hours per week it costs the owner. Then we ranked them. By the end of this video, you'll know which categories quietly win, which famous ones are traps, and the 3 patterns every single winner shares. The full 50-row sheet exists as a document. I'll tell you how to get it at the end. This is worth saving. It's the closest thing this channel has to a map. First, why 0 employees is the interesting number. The census counts 30.4 million American businesses with no payroll at all. Together, they bill about $1.7 trillion. Divide it out, and the average one earns about $57,000 a year. A job, basically, with extra paperwork. 0 employees usually means a gig, not a company. Usually, because the ceiling on 0 is not $57,000. The ceiling is absurd. Marcus Frind ran a dating site alone, $10 million a year in profit, 10 hours a week, and sold it for $575 million in cash. Peter Levels runs a portfolio of small software products by himself from a laptop. Public dashboards put it around $3 million a year. No staff. 1 man. 40 products. No meetings. So the question this episode answers is the one the average and the outliers leave open. What separates the $57,000 gig from the $3 million machine, when both have exactly 0 employees? It is not effort. It is not luck. It's architecture. And architecture shows up in the numbers. Which is why we ran them. The 50 models sort into 8 rooms. Walk the building with me, top floor to basement. Media and audience. Paid newsletters, faceless YouTube channels, programmatic SEO sites, job boards. 200,000 to over $1 million a year, margins in the 80s and 90s. Row 1 of the whole sheet is the paid niche newsletter. 1 weekly send, monetized twice, sponsors above the fold, paid subscribers below it. Same words, 2 invoices, digital products, courses, templates, design assets, research reports. This is the margin penthouse. Notion templates and financial model spreadsheets run at about 95%. Built once, sold infinitely. The marginal cost of the next copy is a download. Micro software, single feature tools, Chrome extensions, APIs, Shopify apps. Up to $2 million a year at 85%, because subscriptions renew whether or not you shipped anything that month. Productized services. Design subscriptions, audits, ghostwriting. Real money, 1.8 million at the top. But look closely, margins drop to 55–60%, and hours climb to 30 a week. It's the room where a business quietly turns back into a job. Communities, memberships, cohorts, masterminds. 20 seats at up to $30,000 each. The members retain each other. The owner is the filter, not the entertainment. Royalties and catalogs, stock footage, book portfolios, music licensing, certification. Work finished years ago, still invoicing. Lean commerce, 1-product stores, Amazon FBA. The biggest revenue on the sheet, $3 million. And we'll see in a minute why I'd still rather own the spreadsheet business. Data and directories, paid directories, calculator sites, lead gen portfolios. The quietest room in the building. Nobody brags about a directory at a dinner party, which is precisely why it still works. Now the rankings. 3 leaderboards, 1 trap, the margin leaderboard, financial model templates and Notion templates, 95%. Preset shops, 93. Design assets, swipe file databases, 92. Notice the pattern. The highest margins on the sheet belong to spreadsheets and templates. The least glamorous objects in business keep the most money. The hours leaderboard, calculator sites and financial templates, 6 to 8 hours a week. Job boards, 6 to 10. Run the arithmetic on a job board. call it $600,000 a year at 8 hours a week, and the owner's time is billing out around $1,500 an hour, while search engines do the distribution for free. The ceiling leaderboard, one product stores and flagship courses, 3 million. Micro SaaS and memberships, 2 million. And now the trap. That $3 million store. Margin, 25%. Ads, inventory, logistics eat the rest. The $700,000 print-on-demand brand, 35%. The video editing subscription, 55%, at 25 to 30 hours a week. The sheet's own rule, and it's the most important sentence I'll read today. A $400,000 business at 90% margin and 12 hours a week beats a $3 million business that owns your calendar. Revenue is what strangers applaud. Margin times freedom is what you actually keep. So what do the winners share? Across all 50 rows, 3 patterns, no exceptions. Pattern 1, one asset, many buyers. Every model on the sheet sells something built once, a catalog, a code base, a ranking, an audience, to a stream of buyers. Nothing trades hours for dollars one-to-one. The moment your revenue requires your presence, you don't own a company, you own a shift. Pattern 2, distribution is owned or automatic. Search traffic, app stores, marketplaces, and email list. None of the 50 depends on the owner showing up daily to be seen. This is the quiet answer to the influencer economy. The product gets found, not the person. The newsletter ranks. The extension sits in the web store. The directory is the search result. Pattern 3. The owner is the filter, not the factory. Where work exists, contractors and software do it. The faceless YouTube channel is a pipeline. Script, voice, edit, where the owner only approves. The design subscription owner is the taste layer. The job shrinks to judgment. What ships, what's good, what's next. Judgment is the only input that doesn't scale linearly with hours, which is exactly why it's the one the owner keeps. Screenshot this. One asset, many buyers, distribution owned or automatic, owner as filter, not factory. 50 businesses, 3 sentences. That's the whole architecture of getting past 57,000. The honest caveats. These are documented ranges from real operators, not averages and not guarantees. For every row there are quiet failures nobody publishes. 0 employees means no payroll. Several models lean on contractors, and the margin says so, and none of this is passive at the start. Frin's 10-hour week arrived 5 years in. Now, the sheet itself. All 50 rows, with the margins, the hours, and the mechanic behind each one, formatted as a document you can actually keep. Comment the word 50 and check the pinned comment. The link is there, free. Fastest route. It's also in the description. Save this video next to the sheet. The map and the legend travel together. Next episode, we take the 10 best rows and rank them properly. The only 10 one-person AI businesses worth starting in 2026. Subscribe so it finds you.